Are Manhattan real estate prices falling? Well, with recent market shifts, this is a question on many people's minds. And this video will do a deep dive into where we are today and take a look at where we might be by the end of the year. Manhattan real estate has always attracted global investors and homebuyers from around the world. However, like any market, it is influenced by economic and demographic factors. In the first 2 quarters of 2024, indeed, Manhattan real estate prices have softened. In this video, I will provide a comprehensive analysis of the current market conditions and answer the pressing question, will Manhattan prices continue to drop? To understand the present, naturally, we must look at the past and understand that in Manhattan, over time, the arc of pricing is continually going upward with the usual ups and downs that you would expect in any active market. Most recently, during the pandemic, while prices in the rest of the country skyrocketed, prices in Manhattan softened and transaction volume was down considerably. And then we saw a massive rebound in 2021, not only to pricing, but transaction volume. Fast forward to 2023, and when First Republic Bank collapsed and the banking crisis was heading up the news in March of 2023, along with a dramatic increase in mortgage rates, suddenly once again transaction volume slowed considerably. And while that decrease in transaction volume during 2023 was anywhere from 11 to 18%, depending on the Manhattan neighborhood, and all the way up to 42% in northern Manhattan, that was a decrease in transaction volume, not necessarily pricing. But once we got to the end of 2023, we saw sellers start to soften, start to negotiate, and that's when we saw prices come down, which was reflected in the first quarter and second quarter reports of 2024. So all that history brings us where we are today. Recent data indicates that prices in certain segments of the Manhattan real estate market are declining. However, the extent of the drop depends on neighborhood, property type, and price range. The Corcoran report for the second quarter showed that the median price was down by 2% and the average price is down by 7%. This marks the first time that prices have dropped for 2 consecutive quarters since 2018. Despite this, some areas remain stable or are even seeing modest increases. I can tell you from my own experience with my own listings recently, I have actually had multiple bidding situations on properties that were beautifully presented and priced for today's market. Several factors are driving the price decreases. For those looking for properties under $3 million, they are especially sensitive to the increased mortgage rates, while in the luxury market, we see that buyers depending more heavily on cash, knowing that they can refinance later when the rates come down. But even as mortgage rates remain high, a number of buyers below $3 million have entered the purchase market because they are tired of paying high rental prices. While economic uncertainty and changing demographic patterns certainly play into Manhattan's real estate pricing, you really cannot underestimate the impact of the intangible emotional benefit of owning your own place. As I always like to remind my viewers, Manhattan is an island and it does not follow the national housing trends. Certainly they're impacted by mortgage rates, but when it comes to the trends of the rest of the country, living in Manhattan, vertical living in such a densely populated, highly desirable global environment makes the trends very different than across the rest of the United States. Predicting future trends is always quite challenging, but with current data and historical analysis, we can certainly make an educated guess. Here's what we do know. Pricing has come down for the past 2 quarters. We also know the inventory has increased. Now, looking at that inventory increase, it's important to note that the usual new development contribution to that inventory has lessened as there are fewer and fewer buildings coming online. So in the future, we could see a shortage of inventory. The other thing we know is inventory levels as of the end of the second quarter were hovering around 8,000, and that is a little bit high, but I don't feel comfortable saying that we're completely in a buyer's market, simply because that inventory is spread over a huge amount of neighborhoods and price points. Deciding to buy in Manhattan is always a significant investment. With current conditions showing price drops, now could be an opportune time for buyers to capitalize on favorable pricing, because we don't know how much longer it will last. Furthermore, the Fed's recent announcement that they expect to reduce rates in September will bring down mortgage rates. Once that happens, we will see demand increase. What will be really interesting to watch is we also know that historically in a presidential election year, transaction volume is lower, and that's just because people are distracted. And this particular election will be very distracting. Ultimately, Manhattan's real estate market has a long history of being quite dynamic, always offering challenges and opportunities for buyers and sellers alike. So please feel free to reach out to me anytime, and I'd be more than happy to discuss your particular approach to buying or selling in New York City. Thanks for watching. If you found this video helpful, please like and subscribe for more updates on the New York City real estate market. Have questions or need personalized advice? Feel free to leave a comment below or reach out to me directly. I'd be happy to help. Until next time, be well and happy house hunting.